What if I told you there's a single chart that can tell you when to buy every currency in the world? Not a secret indicator, not a rumor, not a guru's prediction, but a real data-driven signal used by hedge funds, central banks, and the smartest macro traders alive. It's called the Currency Strength Index, and once you understand how to read it, you'll see the entire foreign exchange market differently. Because currencies don't move in isolation. They move in relationships. When one rises, another falls. When one central bank tightens, another eases. The global currency market is a constant tug of war, and this chart shows you who's winning. Picture 7 currencies: the US dollar, euro, pound, yen, Swiss franc, Canadian dollar, and Australian dollar, all moving like planets in orbit. The Currency Strength Index measures the gravitational pull between them. It's not about predicting the future. It's about revealing the truth of the present before everyone else notices. When a currency's strength line starts diverging from the others, that's where opportunity lives. Let's take an example. In 2022, while the world panicked about inflation, the dollar's strength line began climbing relentlessly. Traders who understood the chart saw what it meant. The Federal Reserve's aggressive tightening cycle would make the dollar king. The signal appeared months before mainstream analysts caught on. Those who followed it didn't just survive the volatility, they profited from it. The beauty of this chart lies in its simplicity. It compresses every economic story, interest rate decision, and market emotion into one visual language. Every currency's heartbeat on one screen. Now imagine you're watching it in real time. You see the euro weakening, the yen plunging, and the dollar accelerating upward. That's not noise, that's a signal of capital flow, risk sentiment, and monetary divergence all happening live. Here's how the pros use it. When the lines start spreading apart, volatility is coming. When they converge, markets are stabilizing. When one currency sharply breaks above all others, that's the leader. And when it breaks below, that's your laggard. The key is in relative strength. Let's say the US dollar index is strong, but the Swiss franc is stronger. That tells you something critical: risk aversion is dominating. Money is seeking safety, not yield. In that environment, you wouldn't want to buy high beta currencies like the Aussie or pound. You'd rotate into safe havens. But when the Australian dollar's strength line begins to cross above the yen or euro, it means growth optimism is returning. Commodities are rising, risk appetite is improving, and capital is flowing back into risk currencies. This one chart captures the rhythm of global money flow, the same rhythm that drives stocks, commodities, and bonds. Let's look at the psychology behind it. Every currency is a story. The dollar represents global confidence and liquidity. The euro represents industrial demand. The yen is the fear gauge. The pound reflects growth optimism. The Aussie mirrors commodity demand. And the Swiss franc signals safety. When you plot them together, you're literally watching global psychology unfold. Greed, fear, risk, safety, expansion, contraction, all in one frame. Traders who master this chart don't guess. They listen. In early 2023, while most investors thought inflation had peaked, the yen began strengthening against every major currency. That wasn't random. It was Japan preparing to shift away from ultra-loose policy, a massive change that would ripple through global markets. By the time headlines caught up, the move was already halfway done. That's the magic of this chart. It tells you what the money already knows. Now let's break it down practically. When two currencies diverge, one rising, one falling, you found a trading pair with conviction. If the euro is weakening while the pound is strengthening, euro to pound sterling becomes a potential short. If the dollar's strength line rolls over while the Aussie surges, Australian dollar to US dollar becomes a long. The wider the divergence, the stronger the signal. But here's the secret few share: you don't trade every cross you see. You focus on alignment, the moment when macro fundamentals, sentiment, and the strength chart all point in the same direction. That's when probabilities explode in your favor. Central banks give you the why. Economic data gives you the what. The Currency Strength Index gives you the when. It tells you when momentum is shifting, when capital is flowing, when the tide is turning, before the mainstream market reacts. And in a world of algorithmic trading and lightning-fast information, timing isn't everything. It's the only thing. Let's go deeper. In 2008, before the global financial crisis, the yen's strength line exploded higher as risk assets collapsed. Traders watching the charts saw the panic forming in real time. In 2015, during the Chinese devaluation, the dollar's strength soared while emerging currencies fell apart. In 2020, the Aussie's line collapsed weeks before equity markets crashed. And in 2022, the dollar's vertical ascent screamed, tightening liquidity long before equities dropped 30%. Every major turning point in modern markets has shown up on this chart first. Because currencies are the market's foundation. They price everything. They translate the language of capital into motion. Think of this chart like a weather radar. You can't stop the storm, but you can see it coming. When a currency starts to weaken while others strengthen, that's your cold front meeting a warm front. Volatility is next. But the pros don't fear that. They prepare for it. They use it. That's what separates traders who react from traders who anticipate. The currency strength index isn't about prediction. It's about awareness. It shows when the market's emotional gravity shifts, when euphoria fades, when fear takes hold. It's what the smartest traders watch before every major move. Because once you see this chart, you can't unsee it. You start noticing patterns. You see that every major rally, crash, and reversal begins the same way. One line moves, then another, then the whole picture tilts. And that's when opportunity is born. It's not magic. It's macro. It's not fortune telling. It's flow telling. So if you're still trading blind, staring at candles without context, you're missing the single most powerful map in global finance. This chart tells you when to buy every currency and when to stay out. It tells you when markets are breathing in and when they're about to exhale. Learn to read it, and you'll never look at Forex the same way again. If you found this eye-opening, make sure to like, comment, share this video with other traders, and subscribe for more deep dive stories that reveal the hidden code behind global markets.